Hello and welcome back to CMG Oral Space online lessons. I am Emmanuel. You can call me Kujo. So we are still on mastering our candlestick patterns. That's mastering class, master class for candlestick patterns. So we are treating the different types of candlestick patterns, right? So if you are new to this episode of this series, I suggest you go back to the previous episodes and then learn from there. You have better understanding of this class, right? So at the moment, we are on Morning Star. We have treated a number of them, about four types of the patterns. So we are on Morning Star, and then we also look at the Evening Star. So basically, we are on the types of stars of candlestick patterns, right? So let's zoom in. Now, we are going to look at Morning Star. Now, from the previous candlesticks, I told you earlier that candlestick patterns can actually be one candlestick type, one, either bullish or bearish, right? A candlestick, just one of it. So we have looked at example of them, right? And then we move on to the types that consist of two candlesticks, right? We have the engulfing and then, we have the engulfing. The engulfing consisting of the bullish engulfing and then the bearish engulfing, right? It is made up of two candlesticks. Then the doji and then the dragonfly, the doji types are 1-1. They are consist of one. So on the evening star and the morning star, they consist of three candlesticks. So meaning if you see two candlesticks type, it is not a morning star, right? So it has to constitute of three candlesticks making up that, right? So that is the knowledge, the idea that I want to give you before you even zoom into it. So that is the idea. Now, looking at the picture, let me throw more light on the picture before you zoom in. So usually I told you that we are going to use colors to represent the types of candlesticks so that we don't have to waste time to identify looking at the close and opening of the candlesticks, right? So we use the colors. So in this book, we are using the black candlesticks to represent the bearish one, and then the white to be the bullish candlesticks, right? So if you see any bullish candlestick which is white, it means it's a bullish candlestick. If it is black, it's what? A bearish one, right? So now we have the morning star. The morning star consists of what? Three candlesticks, right? We have on this current screen, we have two blacks coming before the white one, right? Even though we have said earlier that the color of a candlestick does not really matter, but for simplicity's sake, let's use the colors to represent them so that it's easy for us. When it comes to the time that you don't need the colors for that, I'll tell you. But just assume that is it, right? Because on your chart, you use colors to represent them. So we are looking at what? The morning star. Now, the morning star pattern is considered as a bullish reversal pattern. The morning star is considered to be a bullish reversal pattern. I said earlier, if you see or if you hear the word or the term being qualified by either bullish or bearish, it means that that reversal is of that qualification that we are talking about. So if it's a bullish reversal, meaning the trend will move up, right? The trend will move up. It's bullish pattern. Now, it often occurs at the bottom of a downtrend. We are saying that it often. It doesn't mean it always happens at the bottom. It can happen at anywhere on the chart. But we are looking at the probability that when it occurs at the bottom, what does it do? So when it happens at the bottom, what does it do? And it consists of what? Three candlesticks, like I said, right? So it's a bullish type? Bear in mind. So there are points that we do some exercise, right? We have all these candlesticks displayed on the chart, right? So you have to identify them first. After identifying them, you will tell me what type is it. Is it a bullish or a bearish one? And after identifying that, you should understand, we should know the impact it will have on the market, as in the direction that it will move. Right? So there are 3 things that you have to take note of them. That is it. So the morning star, in fact, is a bullish candlestick pattern. Once again, the morning star is a bullish candlestick pattern. Meaning, when you see them at the appropriate place, at the right place, it's going to what? Move upwards. That is what it is. Good. Now, we are saying that the first candlestick, the first candlestick, that's meaning from the left, the first candlestick, right? The first candlestick is bearish, right? Get that? The first candlestick is bearish, which indicates that sellers are still in charge of the market. Sellers are still in charge of the market because it is what? Bearish, right? Meaning the market is what? Moving upwards at the moment that we saw it. Now, the second candlestick or the second candle is a small one, which represents that sellers are in control. The first one, the sellers are massively in control. We move to the second one. The second one is usually a small candlestick. Look at the pattern very well. The first one is a big bearish candle, meaning the sellers are strongly or relatively strong in charge of the market. Then move to the second candlestick, which is usually small, right? It's a small candlestick. And then also suggests that they are still somewhere in charge of the market because still the market is what? Moving down. That is the meaning. But they don't what? They don't push the market much lower because they are losing their momentum. Even though they are still in charge, the power is not as strong as the previous candlestick, right? So the second one is small, right? But they don't push the market much lower. And this candle can be either bullish or bearish candle. So bear in mind, this is very important. So it means that the candlestick in the middle could be any type of candle. It could be green, or it could be red. It could be white, or it could be what? Black. So it doesn't matter. Get that in your mind. The first candlestick must be what? The opposite type is what? Is bearish. In fact, it is bearish. Then the second one, which is a small one, can be either green or red. And it's a small in the sense that even when it is small, we are talking about what the size of it. We have treated what is the size of a candlestick, what is the size of a candlestick can do, the power that it has, the pressure, the momentum that it has on the market. So that is it. So the middle one or the small one, the middle one can be any type of candlestick, but it is small. So if it is small, meaning it has no power, the power it's losing its power, momentum. So that is it. Then we move to the third candlestick, which is the last one, and that one must be a bullish candlestick because the name actually was taken from this word candlestick, right? Bullish candlestick pattern for that morning star was taken from the last candlestick, right? It was taken from the last candlestick. So you just have to take note of this, right? The first one must be bearish. The second one can be any type of candlestick. Then the last one must be what? Bullish. So that is it. Now, let's take it again. So the third candle is a bullish candlestick that gapped up on the open and closed above the midpoint of the body of the first day. This candlestick holds a significant trend reversal signal. So this, I'm going to explain that in a simple way. Now, the morning star pattern shows us how buyers took control. The morning star, that's in the whole pattern. Buyers took control of the market from sellers. When this pattern occurs at the bottom, when this pattern occurs at the bottom of downtrend near a support level, it is interpreted as a powerful trend reversal signal. So don't worry, I'll come back to this. So we were saying about the formation here, this one, was talking about the formation, how the pattern looks like for easy identification, right? So this one opens here. This is a bearish one. Bearish candles always opens at the top, and closes down, right? Closes down. A minute. So it opens at the top and then closes down. And then bear in mind that anywhere the previous candle closed, that is where the next candlestick will open. So bear that you can have a look on your chart. You can Google anything, maybe a chart, right? Any pair of any of the pairs of the currencies, and then look at how they actually move. So where a candlestick closes, that is the beginning of a new one. The point that the new candlestick opens. So this opens here, then it closes here. When it closes here, the next candlestick also opens on the same line. The same line. Yeah, sorry for my drawing. It opens on the same line. So when it opens on the same line, then it closes down. Right? So in fact, it closes down because this is a bearish one. Right? It closes here. If it was a bullish one, you could actually close at the top because it's a bullish one. Right? So from here, then we move to what? The second, in fact, the third candlestick. The third candlestick. So when it also closes here, this usually, if it's a bullish one, pattern like we are saying, it will always gap up from the closing of the previous candle. So we move, it opens here, it's gap up because it's a bullish pattern. It will gap up after it will move and then closes either above this one, the first day. We're talking about the first day of the candlestick. When you see the first day, you are only talking about the first candlestick with respect to the pattern that we have taken, that we are dealing with, right? So it opens here and it will gap up. Now, this third candlestick could actually close in the middle way of the first one, or in fact above of the first one, right? It could actually close it. So let me just draw that for simplicity. Let's say this is the bearish one, the first candlestick. The small one comes this way, right? Now, this could actually close here. So it's not necessary that it must always close above the first one. It's not always like it's going to this third candlestick is going to close above the first one. But in fact, if it closes above it, then there's more power. It just adds to it adds to our confidence, right? That is it. It only adds to our confidence, but it doesn't dispute the fact that it is it's a bullish morning star pattern. I hope this is understood. So just take note of it. If you think you are getting confused, pause the video and then let it simmer and then come back, right? And then play it again. That is it. So the third candlestick does not always closes above the first one, the first candlestick, right? This is the first one. This is the second one, and then this is the third one. So it doesn't always closes above the this one, not the first one. It can close in the middle way. That was what we are saying here. What is it? We said the third candlestick is the candle is a bullish candlestick that gaps up on the open and close above the midpoint of the first day. This candlestick holds a significant trend reversal signal, right? The morning star pattern shows us how buyers took control of the markets from sellers. When this pattern occurs at the bottom of a downtrend near a support level, now you know what is a support. So when this happens at the bottom near a support level, it is interpreted as a powerful trend reversal signal. So this is it, right? So with the help of the explanation I gave earlier, this could be the resistance level, right? It's moving down. Price is generally moving down. Then go to the resistance. Sorry, it goes to the support level, right? go to the support level. And then what is formed here? Now, whenever you see the red ink, the red ink what encompass covers the area for the pattern, the candlestick pattern for that type that we are talking about. So always look out for that. This red pattern or the red shape, the red area talks about what? The pattern. So this is a bullish what? Morning star, right? So that is it. So when it forms at the bottom, then the market is what move up. Generally, it's going to move up generally. So that's what we see. So supposing you have seen this, and then maybe you sold around this place. Sorry, you bought. The time should rather be bought. But when you see the price is going to move up, so if the price, you have the anticipation that the market is going to move up, then you can buy, because we only buy when the market is going up, because you want the market to go up. That's what you are buying. If you are selling, you want the market to what? Go the opposite way. That is it. So you buy here, the market, you can put your TP around this place. the TP around this place. Your SL could be just below the dark pattern. Then you move ahead. So this is what the bullish morning star consists of 3 types of candlesticks. The above chart helps us understand and identify the morning star pattern and how it is significant when it is formed at the bottom of a downtrend. As you can see, the pattern occurred at an obvious trend, bearish trend, sorry. So as you can see, the pattern occurred at an obvious bearish trend, right? The prices were actually moving down. Then when it got there, they move up. So that's what it's talking about. Now, the first candle formed the seller's domination, right? And like I said, the first candle is what? Is the bearish. Bearish means the market was moving down. So the seller's domination. The second one produces an indecision. Indecision in the sense that you might not know what will happen or where the market will move up. I told you, because if you look at the second one, it's actually the previous type of candlestick pattern that we discussed, right? We talked about what doji candlestick patterns, and we have about 3 of them to 4. So you can look at the previous video, I think episode 5, right? And then you can look at that. So this is the doji one. A doji one usually talks about what? The indecision in the market, right? So that is it. Then we have moved to the what? The indecision. Yeah, good. You see, the first candle formed the seller's domination. The second one produces indecision in the market. The second candle could be a doji. Yes, it could be a doji or any other type of candlestick. Like that's good. This is good for the clarification. It could be any type of candlestick, right? Good. Now, but here the doji candle indicated that sellers are struggling to push the market lower, meaning they are losing their power. They are losing their power in government. That is it. The third bullish candle indicates that buyers took control from sellers, because the bullish candle that forms, and the market is likely to reverse. So if it's moving down, now it's going to move up. This is how professional traders analyze the market, based on candlestick patterns. And this is how you will analyze financial markets, if you can master the anatomy of candlestick patterns and the psychology behind their formations. That is it. Now we move to the evening star. In fact, whatever we have treated now, it's the exact opposite of this type of candlestick, right? So I don't think if I should even treat that. let's treat it anyway. So whatever we have learned from the morning star is the exact opposite for the evening star. So I think I will not even speak much. Now the evening star pattern is considered as a bearish reversal pattern that usually occurs at the top of an uptrend. We said that the morning star usually occurs at the bottom. right? Now the evening star will happen at the top because it's a bearish reversal pattern, meaning when it occurs at the top, it's going to move the market down because it's a trend reversal. In fact, it's a bearish reversal pattern. It's going to move the market down, right? So if you see at the top of an uptrend, it's going to move the market down. Now, the pattern consists of 3 candlesticks, like the other one. The first candle is bullish. So like I said, it's the exact opposite for that. So the first candle is bullish. The second candle is a small candlestick. It can be bullish or bearish, or it can be a doji or any type of other, but any other candlestick. The third candle is a large bearish candle. Take note of that, like we treated the other one. Now, in general, the evening star pattern is the bearish reverse, the bearish version, right? Take note of it. The third candle is a large bearish candle. In general, the evening star pattern is the bearish version of the morning star pattern. See the example below. Let's see the example below, right? So that is it. The exact opposite. The other one began with what? The red one came with a small one, then came down. It came to the third one. You see, it's going this way, right? The morning star, the bullish one, goes this way. Now forms this way. Now the evening star forms this way. Look at that. You see, forms this way. Called here, we saw this one down here, but here, this one is at the top. Simply because where this one closed is where the second one will actually start what? Opening, and then will close anywhere that it's supposed to. So that is it. So the first one is a bullish candle. First is a bullish candle. The third one can be any candlestick at all. Then the third one is actually with a bearish candle. So that is it. Now let's see the impact that it has on the market when it is formed. The first part of an evening star is a bullish candle. This means that the bulls are still pushing the market higher. Right now, everything is going all right. The formation of the smaller body shows that buyers are still in control, but they are not as powerful as they were. The third bearish candle indicates that the buyer's domination is over. That's the third one. And a possible bearish trend reversal is likely to happen. So let's see another example on the chart, actually. So this is the general uptrend until we see this formation happening, right? Among here, we didn't see any special pattern forming, right? Or any of the morning, evening star or evening star even forming here, right? Now we saw it here at the top with the help of what? Always try to draw your resistance and support level, right? We also look at another one called the trend lines. It can also help you know your support and resistance also, right? So that is it. So you move upwards, and then until this one is formed, then the market changes direction to this point. That is it. Now, as you can see, the market was trending up. The first candle in the pattern indicates a long move up, right? That because it was bullish. The second one is a short candle indicating price consolidation, right? I told you that consolidation means ranging market. They move up, move up, move up. It's like another term for what? Ranging. So that's the second one that we are talking about. Second one is a doji one because there's indecision, consolidation, and all that. So that is it. Now, in other words, the trend that created the first long bullish candlestick is losing momentum. The first one that created the first one is a bullish one. It's saying that it's losing its momentum to this one, and then, to this one, this one, and then finally this one. Or better still, we can even continue this way. Okay, so, sorry about my drawing. So that is it. So the final candlestick gapping lower than the previous candle, indicating confirmation of the reversal and the beginning of a new trend. So it was moving here. Now the new trend will be like this way. So that is that. So now for the evening and morning star, I think it's very short. So we will end here and then move on to the next chapter. That's the hammer in the next episode rather. So thank you very much for watching. And then you can look in our bios and our description, and then look at what we do, right? We provide private one-on-one lessons. And then if any information, any question that you need to be answered, you can contact us. Thank you very much for joining us. Meet you in the next episode. Bye.